Hey, welcome to the First Time Homebuyer Workshop with Julie Marion, and today we are speaking about the Federal Reserve and you. Here on this channel, we are going to be giving you acorns and acorns of knowledge so we empower you, first-time homebuyer. Because let's face it, buying a home involves 5 professions with a maze of certifications, regulations, and standards. You're expected to understand all of this in record time, often with little guidance. Yes, there are 5 professions involved with a whole set of industry standards, exams, certifications, licenses, state, and sometimes federal regulations, experience levels, knowledge of different products each company offers, all of which you are supposed to absorb, understand, ask intelligent questions as it applies to you and your specific situation, and what the options are and what fits best in your life in a very short time frame, to the point where I consider it to be called overwhelmed. We drop these videos in an effort to help you navigate a little bit about the home buying process, because I want you to really learn what it is you need to know as a first-time home buyer. And when you are so busy with your life, like you probably are, I want you to be able to listen to just one little aspect of this information before you embark on this big purchase. Now, it would be better to start this process 6 months before you say the words, "I'm going to buy a house," but everyone's journey is different, and we are here to empower you. The main thing is that we have got to blow out, disassemble, get rid of, completely destroy, and annihilate first-time homebuyer remorse, which is well over 50% annually. It's absolutely atrocious. And the reasons why are all over the place. It depends on you and what you're not happy with. As recently as November 2023, Homebuyer Remorse, which is an emphasis on home buyer, which could be a first-time, a second-time buyer, a vacation house buyer, any type of home buyer, it was 92% remorse. In my mind, something's wrong with the system that's set up in this country, but it's too big and it's too complex to rearrange. So the easiest thing is for you to become empowered and savvy. I am on a mission to get rid of this problem, and I hope that I can offer you and let you know that the old saying, "If I knew then what I know now, things would be different." As I was sort of peripherally involved in the real estate field, and I thought I knew a lot, and I was surrounded by a lot of really smart people, 2 PhDs in fact. And let me tell you, I made more than one mistake. I am here to help you along the way so that what happened to me doesn't happen to you. And honestly, I had it pretty good. I can only imagine how bad it is for people that are alone and that do not have a banker, an appraiser, a home inspector, an attorney, a real estate broker, and family members that really do know what they're talking about, not Aunt Sally who does real estate part-time. And that they just don't have the good fortunes that I have had. That is why I'm doing this. I care about you, first-time homebuyer. So let's get to it today. I know this might be a little bit of an eye roll, and you're thinking, oh gosh, do I really need to know this? And you can go in blind. But if you do understand this, then you will be in the driver's seat, because you will know how the Federal Reserve works, what it does, how it impacts you as a first-time homebuyer. Understanding the Fed is crucial because its policies affect everything from mortgage rates to access to credit. Buying a home is a big investment, and you'll interact with a lot of transactional people that are part of the home buying process, many of whom may not have your best interests in mind. It's far better to go in informed so you can make the smartest choice for yourself and your future. So who is the Federal Reserve and what do they do? Well, the Federal Reserve, or as affectionately known as the Fed, is our central banking system of the United States, and it was created by Congress in 1913 with the enactment of the Federal Reserve Act. The Federal Reserve has several key responsibilities and functions. It includes monetary policy, bank supervision, and regulation, financial stability, oversight of our payment systems and consumer protection. Seems pretty straightforward. It's a conservative entity, not a risk taker, but they can make mistakes. Just because they're conservative doesn't mean they don't make mistakes. So let's get to some of these things that affect you. Monetary policy is to implement the policy that achieves stable prices, maximum employment, and moderate to long-term interest rates. The Federal Open Market Committee, which is made up of members of the Federal Reserve Board and the regional Federal Reserve Bank presidents, sets the monetary policy by influencing the supply of money and credit in the economy. They do this primarily through the open market operations, adjusting the federal funds rate, which is the interest rate at which banks lend to one another overnight. And there are other tools like reserve requirements and the discount rate. In a nutshell, the Federal Reserve uses monetary policy to control the flow of money in the economy, affecting interest rates by adjusting the federal funds rate. Lower rates mean cheaper borrowing costs, which is ideal when locking in a mortgage rate. The Fed's actions, like rate cuts, directly influence mortgage rates that you'll encounter. And why it's important for a first-time home buyer is understanding when and why the Fed adjusts the rates so that it can help you time the purchase to benefit from a lower mortgage rate, potentially saving you thousands over the life of your loan. You are watching this so you can time the market in the existing economic cycle. But more importantly, this gives you a game plan on how to manage this debt. That we covered in our paid class, the First Time Homebuyer Workshop. The cost of not knowing this or missing this is that these changes can be costly. For example, if you lock in a mortgage rate during a high interest rate period, you could end up paying significantly more interest over 30 years, for example. Say a 1% increase in the mortgage rates can add up to over $30,000 over the life of a 30-year loan for a typical first-time home buyer. The second responsibility is the bank and supervision and regulation. The Federal Reserve supervises and regulates banks and other financial institutions to ensure the safety and the soundness of the banking system and to protect consumers. It oversees banks to ensure they comply with various regulations, such as those related to capital adequacy or liquidity and consumer protection laws. While the Fed oversees bank regulations influencing lending standards and requirements, this includes the capital requirements that affect the bank's ability to extend loans. Tightening lending standards can make it harder for buyers with moderate credit or low down payments to secure mortgages. And if you understand these standards, you as the first-time home buyer can prepare financially by improving your credit score or saving more for a down payment before the Fed's next tightening cycle. The cost of being unaware, not knowing, is that should you try to buy during a period of tightened lending standards without adequate preparation, well, you could face a loan denial or higher mortgage costs, but probably just higher mortgage costs because banks are in the business to lend money. You will notice these costs in your rates and in private mortgage insurance charges. The other part is financial stability. The Federal Reserve monitors and assesses risk to the stability of the financial system as a whole. It works to identify and address potential threats to our financial stability, such as excessive risk-taking by financial institutions, disruption in the financial markets, or a systemic vulnerability. This has happened many times in our history. The famous crash of 1929, the savings and loan scandal, the meltdown of the 2008 housing crash. So paying attention is a good way to protect yourself. The other responsibilities are payment systems. The Federal Reserve plays a key role in the operation and oversight of the nation's payment and settlement systems, including automated clearinghouse or the ACH, the Fed Wire Fund Service, and the development of new payment technologies such as electronic payments. It ensures the smooth functioning of these systems, which are essential for the efficient flow of funds and transactions in the economy. The feds also oversee consumer protection. The Federal Reserve implements and enforces various consumer protection laws such as the Truth in Lending Act, the Equal Credit Opportunity Act, that ensures that consumers are treated fairly in their interaction with financial institutions. It also conducts research and provides resources to promote financial literacy and education. So there is a lot of oversight and there are a lot of committees, too many for this video. But I do want to mention the reports that you will want to take note of in your travels and when the Federal Reserve meets. The Federal Reserve meets regularly, January, March, April or May, usually late April or early May, June, July, September, November, and December. So figure out when the next meeting is. These meetings are typically held over 2 days, and the decisions about what is going to happen is announced on the second day. The schedule for the Federal Reserve's meetings is made available to the public well in advance and is on their website. Also, this board talks about the economy and they rely on many factors. So if you hear about these reports, I'm going to list them out, make a note of it, and you will see how it ties into what actions they take. They're very important and they're very comprehensive. So the first report is the Employment Situation Report. This is from the labor market, the jobs being added, the unemployment. It's a report issued by the Bureau of Labor Statistics. Then we have the Gross Domestic Product, or the GDP report. That is released by the Bureau of Economic Analysis, and it measures the total value of goods and services produced in the economy. It provides insights into the overall health and the growth rate of the economy. The Consumer Price Index, or the CPI, this is a big one because a goal of the government is to keep inflation at 4% or below. And the CPI is widely used as a measure that tracks changes in the prices that are paid by urban consumers for a basket of goods and services over a specific period of time. It's published monthly by the Bureau of Labor Statistics. The CPI is composed of various categories, including food, housing, transportation, medical care, and recreation, among other things. By tracking the changes in prices of these goods and services, the CPI provides insight into the rate of inflation experienced by consumers. Then we have the Producer Price Index, the PPI. The PPI, also published by the Bureau of Labor Statistics, measures the changes in the prices received by the domestic producers for their goods and services. It provides insights into inflationary pressures at the producer level, which can influence the consumer prices. Then we also have the Retail Sales Report. This report is issued by the Census Bureau, and it provides data on retail and food service sales, which is an important indicator of consumer spending. That's a major driver of economic activity. Then you have the housing market indicators. The Federal Reserve pays very special attention to various indicators related to the housing market, including home sales, housing starts, building permits, and home prices. These indicators provide insights into the health of the housing sector, which has a significant implication for the broader economy. Business surveys purchasing managers such as the Institute for Supply Management and the manufacturing and non-manufacturing services. These reports provide valuable information on business activity, including trends in production, new orders, employment, and inventories. Then we have the financial markets data. The Federal Reserve closely monitors financial markets, and such as interest rates, bond yields, equity prices, and exchange rates. These indicators provide insights into investor sentiment, financial conditions, and the transmission of monetary policy. You can hear through all of this discussion that it's not just some fly-by-night whimsical thing. It's thousands and thousands of professionals, professional economists, bankers, regulators, companies that all monitor all of this, that boils down to what us, the little guy, will be offered with our mortgage interest rate so we can buy this house. This is why I say understanding how all of this works will now empower you to maneuver and to get yourself ready so you can check all the boxes correctly so you get the lowest rate. You first-time homebuyer are on your way to becoming very savvy. Keep this going. We invite you to join us in our free mini class entitled Homebuying Chaos Unwrapped. The link is in the show notes. This class explains who does what and why. And so as soon as you walk into an open house, fill out a form or call a banker, you will be in the driver's seat. We do have a paid class, but I want you to get to know me honestly so that you can see if what I'm talking about is helping you. There are so many gray areas in real estate, and I believe this is where Homebuyer's Remorse can start. You have been promoted to CEO of your home buying journey, even though you didn't know it. It's pretty scary if you don't know exactly what you're doing. I think of a CEO as someone who has been in business for a long time, super knowledgeable, lots of experience, and a few life experiences under their belt. Not someone who's doing something for the first time, but hey, that's me. So you can check out that class. And homework. Yes, you have homework for this video. I know it's unusual, but this week, since we've been talking about the Federal Reserve, go to the Federal Reserve government website and read a little. Look around, see what they're talking about. This will make you one savvy first-time homebuyer. Until next time, from the team at the First Time Homebuyer Workshop with Julie Marion, bye for now.